Welcome back. If you want to own real estate, NYCE is letting you invest in a piece of a property for as little as $100. NYCE CEO Philip Michael joins us now for more. And Philip, this is a property at Temple University in Philadelphia. You first had a public offering for a building at this location back in 2020, and you're building on this now. Explain how this works.
Right. So the way that it works was that we took it through something called the Regulation CF, which allows people that are so-called non-accredited investors to come in and own a piece of a property that was typically reserved for so-called accredited investors who are worth $1 million or more. What our mission is to help people who aren't necessarily part of the 1%, but part of the 99% to come in and own a piece for as little as $100. We did that. People came in at $1 million valuation. 3 months later, it appraised at $2 million. And then we have more land around the property. It's a small tech neighborhood, if you will, inside campus. We call it Silicon Square, similar to Silicon Valley. And people can now we're closing it up, buy in the second part, phase 2 and phase 3. And then here in Q1, in terms of the IPO, we will consolidate the whole project into one stock. And then the plan is to list it on Lex Markets, which is NASDAQ-powered real estate trading platform, where people will be able to get a piece of this development for $100, trade in and out freely. And yeah, that's what it is. They'll be able to do that, and they'll have it in their app like TD Ameritrade, Schwab, and so on and so forth. So that's what it is.
It's genius because you bring liquidity to a class of investors who, one, have been priced out because they're not accredited, but the liquidity is a big part of it. How much do I make if I go in at $100 though? I mean, this is fractional. So, I mean, $100 is only a couple pennies, right?
That's absolutely correct. Think about it how it is if you invest in Tesla or Amazon. The rate of return is the same, whether it's me, whether it's somebody that put in $100,000 or somebody that put $100. So year to date, ourselves and our co-investors are up 105.5%. So it's 2x. Now, granted, it's a high inflation environment, and equities have done well in that environment as they typically do. So that's not necessarily a normal case. But to answer your question, if you get a 2x return on $100, you have $200. However, if you have $100,000, then it becomes $200,000. The numerical value changes dramatically, but the rate of return is the same for everybody. But the idea is not necessarily for that $100 to turn into $1 million. It's to get people started, just like retail investors that get into the stock market that haven't done it before via Robinhood or a number of the other apps that are out there. So that's what we aim to do, give people access to alternative asset classes just like real estate and deliver the same type of results.
Do you have a sense? Right. And do you have a sense of who your investors are? Because we saw in the past year and a half, there has been this explosion in fractional share ownership in the Robinhood investor, the Reddit retail investor. So who are your investors?
Well, it's really interesting. There's a high number. It's north of 80% that are people of color, which is, it dramatically outdoes anybody else that's really on the market. And I think it's because we've been able to communicate with a particular market of particularly people of color and minorities. There's this statistic that says by 2053, Black wealth specifically will drop to zero, the median Black wealth. And there's this rising wealth gap. But the number one driver behind that is absence of real estate ownership. So we really wanted to make it accessible to people who haven't had it, get them familiar with the asset class, and hopefully go out. Yes, of course, learn how to build a diversified portfolio within what you have, but also go out and buy property for yourself, because this is where the bulk of wealth is built. So it's almost like a gateway drug to investing by using our properties in that sense. I hope that answers your question.
You did, and I won't keep saying genius, but I got to ask you because on one hand, alternative wealth, when you invest or alternative investments, you're locking it up. But with this, you have the option of liquidity because you can trade your investment. But is there also the way like a real estate investment trust would work? Are these buildings, are they rental income kickoff? And does the holder of the equity within the investment get a fraction of I'll call it the dividend, the payments?
Yes. The short answer is yes. Now, we have different type of properties with different type of investment appetites. This one in particular was a development project, which means it doesn't cash flow until it's stabilized, which means once it's fully rented out and then it'll cash flow. The plan with the stock, once it's trading, is to have it be a dividend stock, similar to how a REIT would be. So it was actually a really great question. Yes, that's how we wanted to be. That's phase one that we had, that stabilized in the opposite corner is where people could get in. Also at the development, construction price point, if you will. And then once stabilized and once it's trading, they'll get in there to be able to trade in and out while collecting dividends according to their fractional ownership share of the property. And then they'll get the equivalent, their portion of the rent roll, right? So that's how it will work.
Do you have plans to expand these kinds of IPOs outside of the Philadelphia area? And if so, what places are you targeting?
That's a really good question. I really like Philadelphia. We have other properties in other parts of the country, and this is something that we really want to do with these particular type of projects. Now, with a development project, the risk happens on the front end, meaning if you buy a piece of land, that's when it's the riskiest because you have to get approvals, you have to get financing, you have to make sure it gets built and then leased out. Once it's closer to completion, a lot of the risk has been removed. So that's what we like to do. Put up our own money first, bring it close to completion or even completion, and then we let people buy in so there's not that long of a time period before they can get into liquidation or collecting dividends if that's what they want to do. To your question, we have properties down in South Florida that we're exploring, that we're actually developing in South Florida right now as we speak, in Texas and other areas like that. I don't want to say too much, but yes, we absolutely have plans to do that. I just have to be careful what I say because it's not something we've filed for yet. But absolutely, that is a plan for the future projects, just so people have an exit option, can have a great experience with this, because a lot of them are first timers. So, for instance, this project has over 5,000 people of color who are first time investors in this particular asset. So we want to make sure that there's a straight pathway to getting your returns, cashing in and out, and having that good experience. So you hopefully continue, not just with us, but to build your portfolio, because that's really the cornerstone of having of building wealth for yourself. So we just want to be the gateway drug for people to get the wealth management and wealth building tactics that the 1% has. We're bringing it to the 99%. So that's how we want to do it.
All right, and we were looking forward to more updates out from NYCE. Philip Michael is CEO of NYCE, and we wish you a great weekend.